Dude, this Amazon move is just super sus to me. I can never ever get a good day from Amazon when the freaking market is up 1%. I'm pissed. I'm pissed. Nah, I'm just kidding. I'm not pissed. It's a good day in the market. It's a good day in the market, better than last week. That is for show. What are we doing today? What are we doing today? Amazon is down 66 basis points. I have no idea why. I think, I kind of do, but if Amazon was up 1%, I would change my mind on why I think it's down. So, again, my going take all the time. Narrative always follows price action. I mean, look at this today. Like, I'm sure you're going to see all the bear cases of Amazon today. You're going to continue seeing it as long as the price continues to lag the entire market. But I mean, the market's back. The market is coming back today. The Qs are recovering quite a good amount, actually. Let me just bring up the charts over here. The Qs are doing pretty good today. They are recovering the 9 EMA, which is a good thing to see on a daily basis. They're back above the 100-day moving average, which is good to see. That's a follow through, actually, I want to see continue into today. It didn't really look too great this morning. It was actually lower than where it was on Friday. But, we're coming back here today. Meta is slowly creeping back. It's back above the 100-day moving average. It's great to see. We have a bit of recovery in the markets. Google, of course, is trading near an all-time high. It's not at 350, but it's still near an all-time high. Give it that. SPY is doing really good, actually. Wow, we're about to have a new closing all-time high today if the market still sustain itself, which is still bullish. Like, you had all this massive sell-off for like the last few weeks, and this is just high beta. This was software and high beta, but like, look at the stock market, guys. I mean, this thing is just pulverizing to the upside. The Qs are coming back, which is a great thing to see. Still, this downtrend is just not, I don't like this price action, this downtrend. Like, I want it to just come back full force. But again, we keep the 100-day moving average come back, 100-day moving average come back. We'll see what happens here. But it is still a bullish market. 1 second. I just want to take a look at something real quick. And yeah, okay. I don't know why I got that notification, but yeah, still a bullish market, guys. And, we have a few of the Sam B holdings over here doing pretty good. I think I might be losing a few over here, but these are my holdings. Actually, I got to add a couple here. And I didn't alert these because, this is not my, I'm not the one who called this out first. We do have on semiconductor reporting today. That one, I was one of the fortunate ones to call this one out around 46, 47 bucks. They're reporting earnings today, and they are closing at a new 52-week high, I believe. Yep, new 52-week high over here, which is good to see coming to earnings. I mean, it's not the most bullish setup into earnings, but arguably, I still think it's a very undervalued company. Not as undervalued as back here. Now it's that's a $26 billion market cap. Looking for some mid caps to buy. I did have a starter position in Silicon Motion. This one is also in somewhat of the power chip sector. I'll get a little bit more deeper into this tomorrow, but I did have a starter position on it. Hey, Sam, why are you buying a company when it's at all-time highs? Well, guess what? It is a bullish chart, and I have no problem buying this, okay? But in size, well, that's a different story. But I am bullish this company. They actually did report earnings, and I'll probably go do a little bit deep dive later on with you guys, probably in the after hours. But I have I'm streaming with Amit at the close. We have AMKR reporting after close. We have On Semiconductor reporting at the close. These are two very big positions in the portfolio, around like probably less than 30%. But they're very big positions in the portfolio. No longer in the calls anymore for these companies. They did take profits on those calls, not looking to get back to the calls because that asymmetric upside is no longer there anymore. And these companies are starting to be discovered by Wall Street. Maybe it's too early, but in terms of shares, did reduce any volatility in these positions by being on the off of the calls. Now I'm just straight up shares in this one. So with that being said, how is everybody doing? We are back here on the Wolf Financial Podcast on the Solid Reports. Go ahead to youtube.com/@wolffinancial. If you are on Twitter, you are better off joining on the YouTube. There's lots of content out there. I actually just did a podcast with Zach Pando from Grayscale Research. A lot of very good content for all those crypto bulls out there. I mean, I always provide knowledge. It's always knowledgeable and sound, not advice, but research for myself. I'm not a crypto uber bull, so I don't know too much about crypto, but it's always great to talk to Zach every month on there. We do our podcast every single month. So what are we looking at here today? All right. Let's take a step back here, guys. All right. We had the nastiest sell-off we've had in terms of short positioning for the market in a long time. A lot of fund managers were heavily short the market going into last week, and it kind of bottomed out in the middle of the week, and we saw that short squeeze with Bitcoin at 60K. Now Bitcoin's coming here at 71K, which is good to see. BMR, of course, is coming back because Ethereum's coming back, crypto's coming back. Always good news to see. We had the mega caps. They're out of the way. We have $200 billion of CapEx from Amazon alone. We have over $650 billion of CapEx from all of the mega caps. We have Meta at $120 billion of CapEx for this year. We have Google at $180 billion, and we have Amazon on $200 billion. Microsoft kind of slowed down the CapEx a little bit there, but they still are bullish in terms of spending money for AI. Guys, this isn't slowing down anytime soon. What is the number one beneficiary of all this CapEx? My ladies and gentlemen, it is the picks and shovels. Picks and shovels are the biggest beneficiary of this. The mega caps, not so much right now, but it will come back, right? The mega caps are usually the one leading the markets when you have lower interest rates. Mega caps are the ones that withstand higher interest rates, but lower interest rates is going to be that broadening out for the markets. Okay, you have the S&P 500 equal weight. The RSP is at all-time highs. Okay, that is not a bearish market, and it's hard to be bearish right now. I can't be bearish right now fundamentally on the markets. If we look at the charts, though, it was kind of speaking a different story last week. But at the whole, it is hard to be bearish in this market fundamentally, guys. It is over $600 billion of CapEx. That's a lot of GDP. Okay. We are going to have close to 10% GDP this year. Like, that is a massive acceleration. And if you think about the earnings power of these companies, the earnings power is going to go up because these companies are spending a lot of money, and the S&P 500, not the non-equal weight, not the one where mega caps are 50% of the market cap, the equal weight is going to benefit a lot off of this. That is why it's trading at all-time highs, because when these mega caps spend all that money, it goes toward these mid and small caps that are part of the S&P 500. And they bet, that's not mid and small caps. It's go toward the broader S&P 500, and they're going to stand to benefit the most right now. The mega caps will benefit, but not right now. And that's why they're free cash flow negative, because they're spending a lot of money. So where does that place you in terms of position for the market? For me, I am positioned in the picks and shovels still. I am not buying software hand over fist. These charts look bad. They're not going to benefit right now. They will benefit, but timing is crucial for me. So, like I said, Silicon Motion, open a position there. I'll give more details about that one later. My bull case. We have AMKR reporting earnings today. This is a very big stock in my portfolio. If AMKR and ON Semiconductor go down tomorrow, I am going to suffer. It has to be like a thesis breaking earnings for me to get out of these, because I think there's still a lot of upside left in these companies for myself, of course. But we'll see. I mean, besides that, guys, just staying bullish, we have more than a few things happening this week as well. Let's take a look at the earnings board. We're going to do a quick stream today because I got to take a minute, take a break, prep for this. Hold on a second. Okay. We are going to take a look at a CNBC video real quick because I wanted to play this interview, the Kevin Hassett one, because we're getting a little bit of a turn here with as far as who's going to be the chair for the Fed. Okay. Nomination is unofficially Kevin Warsh. And if Kevin Warsh becomes the Fed chair, a lot of policies are going to change. We've seen a lot of policies happen across the board, a lot of policy changes the last 10 years, but arguably this is going to be the biggest policy change we've seen in the last couple of decades. They've all been outlandishly dovish. Now, at first I thought, okay, hey, maybe we get Warsh. Maybe he might not be so dovish, but he did release some stuff last weekend. Well, not him specifically, but a few of his policies that he's planning to do keeping forward, which is, I would say, borderline yield curve control, right? If you do yield curve control, that means that the Fed is the buyer of last resort for the long-term end of the curve. And that means that you're going to get a lot of selling toward the long end of the curve, specifically in TLT, because as the long-term bonds go down, the yields for those long-term bonds go up, and then you're going to continue to get that upward steepness in the yield curve, which is kind of what you want to see in a healthy economy. We did have that inversion for quite some time, but we do see that, hey, look, if he starts to buy bonds in the long end, you're going to get a lot of selling into that. You would think the other way around. You think that bonds should be going up for the long term, but if the Fed signals that they're going to be buying those bonds, that is not a good signal for the bond market. So let's see actually what Kevin Hassett has. There's a lot of Kevins out there. Let's see what Kevin Hassett has to say as far as any commentary for the Fed, as far as where he sees the economy and so on. I'm going to share this one right here, and here we go.
Trump telling NBC News he's proud of the U.S. economy and that 2026 is going to be even better. Joining us right now is White House National Economic Council Director Kevin Hassett. Good morning to you. There's been a long sort of back and forth about the state of our economy, about how good it is, but also maybe how bad it is, and the bad part being what came before during the Biden administration, and whether the president now owns this economy. Does the president now officially own this economy?
Right. I mean, yes, of course he does. The president is the leader of the free world, and he's the leader of this economy. The bottom line is that there are some things that moved in the last couple of years that haven't recovered. So, for example, there's a big truck going by all of a sudden. So, for example, there was 20-something% inflation, and we've got inflation way down. Incomes are up, real incomes are growing, but we haven't filled the hole from the inflation. So is it Trump's economy or Biden's economy? Right. I think that at some point it's you need to just like slow down and say, okay, so when we're talking about whose economy it is, that whose economies whose economy is the policy being driven right now? Who's going to manage the policy going forward? Who's going to give you the State of the Union in a few weeks that says here's what's going to happen over the next few months and years? And for that, it's definitely Trump's economy.
Kevin, one of the things that we haven't talked about since I don't think we've seen you since Kevin Warsh was
Davos
announced.
is the last time we
right. So, but now, so now Kevin Warsh is going to have the job. Obviously, has to get through the confirmation process. But you know, one of the arguments he's made quite publicly is actually that because of AI and the idea of productivity, that there's an opportunity to lower interest rates, and that you can do that without increasing inflation. At the same time, there's now this new question about what's happening with employment in the country. And I'm curious how you think about squaring those two circles, if you will.
Right. I mean, there's absolutely no question that we're in the biggest productivity boom that we've seen since the 90s, that the introduction of the internet and the introduction of artificial intelligence are very similar in the ways that they're affecting the data. I thought it was interesting. You put up a graphic a minute ago where you showed that the biggest outperformer of the Dow was Caterpillar, of all things. But that's 100% consistent with what we're seeing, which is that, first of all, that Trump's tax policies are making it so that you can expense capital equipment. So there's big demand for Caterpillar stuff. But then also AI is making it so that every company from Caterpillar on up is finding that it's more productive when it does stuff. And so with higher productivity, they get higher profits, and profits is, we often hear from another network, it's a mother.
Great news last week when we were looking at the jobs numbers. I guess one was Challenger Gray and Christmas came out with numbers that were
all right.
The largest number of land.
I think it kind of supports my point. All right. AI is being discovered from these other companies, right? Not just the mega caps, but it's being dispersed around other companies that you wouldn't really think would benefit off of AI. But arguably, I think the reason why Caterpillar is benefiting the most is because, like I said, the S&P 500 or equal weight, or the RSP, or even if you think of the X Mag 7, that one is rallying pretty tremendously because they are standing to benefit. That this is where the money's being spent. Maybe not specifically in semiconductors, but the money's being flowed out throughout the other companies as well. Like it's very hard to be bearish this market right now when you have earnings growth for the S&P 500 growing at 10% plus, right? And I think we're going to continue seeing that for this entire year as long as GDP still stays propped up, which is a result of all the CapEx we're spending on AI, $650 billion or more, and likely going to accelerate into next year. So we will wait and continue to see what happens with that one. All right, so let me go ahead and move on to the next segment. I want to go over on semiconductor real quick. On semi IR, yeah, I'm going to bring this up right here. And I'm going to talk about things that I'm looking for in the earnings coming up for on semi, which they are reporting today, like I mentioned. Earnings presentation. Here we go. All right. So we have On Semiconductor, which is a power chip company. They develop a lot of power chips for multiple sectors. It's not just AI or data centers because they do have the vertical GaN technology, which provides the power throughput that you need for all the service equipment, especially GPUs. It needs to be precise in terms of where they're putting where they're putting this power into. So the other important part that we need to take a look at this earnings and the investment thesis for On Semiconductor is one, they're going to reaccelerate revenue growth from minus 10% up to 10 to 12%, which they're projecting for next year. But you also have their automotive business. So they have three arms in their businesses. Actually, let me bring that down to this slide right here. They have six arms of the business, but they do project that out to certain sectors. They have their energy infrastructure, which is most of their solar panels, but you are seeing a reacceleration in that. When you think about Enphase, First Solar, and all these solar companies, they're bottoming, right? They've bottomed since the last earnings that they've had, and they're reaccelerating their growth, and they're starting to bring more money back to shareholders and starting to expand the margins. On Semiconductor is a massive beneficiary of this. They have a $7.8 billion market. That's the second largest market within their business, and they're addressing this, right? So a 16% growth is likely going to accelerate, which is going to bring that top line back. On top of it, they have EVs. EVs, in addition to that, I think has already bottomed last year. You have interest rates really coming down. That means more people are going to start buying EVs because the cost to subsidize these vehicles is becoming cheaper in an interest rate perspective. These companies, they really want to push out these EVs. Actually, hold on a second. The energy is actually the third largest. The other one is factory automation. Advanced safety, I'm not really focusing too much on this. This is more to do with the EVs again. AI data center, this is one of their fastest growing businesses at 18.9% as of last quarter. This is a $4.4 billion business. This is likely going to accelerate because you do continue to get that massive CapEx boost in terms of buying chips and picture shovels. On Semiconductor is going to have to scale up that business as well. Factory automation, we're seeing a lot of with the robotics happening around the entire world. Amazon's implementing more robotics. You have Symbiotic deploying more robots in the Walmart infrastructure. You have other robotics companies starting to pick up the theme here. This is going to move along on top of that. Charging, this is going to be most crucial when you think about EVs. As we scale out more EVs in the entire global economy, you're going to need to build more of the charging infrastructure, and On Semiconductor provides that power chip to contribute this entire sector. Guys, this is the reason why I'm so bullish on Semiconductor and why I think they are sandbagging their guidance for 2027 and why I think they might accelerate past 10 to 12%. And Wall Street's not ready for this. They are not ready for the acceleration. They were definitely not ready a few months ago, but they're a little more ready today, but they are increasing and hiking their price targets when it comes to this company. So what am I looking for in this? I'm expecting energy infrastructure to continue to reaccelerate. Actually, let me bring up the fiscal AI so I can give this in more of a better visual. I'm going to share this tab right here. All right, so the KPIs, and they have some China exposure, which isn't too important. That's obviously contracting. This is all going to reaccelerate. I'm going to do it on a quarterly basis. Actually, last 12 months so that we could take out the seasonality effect on this. Okay, so yeah, obviously this is all contracting. Last quarter, they contracted at 16%. Was it 16%? Hold on, let me just double check this one real quick. One sec. I'll go over this much later on, guys. Right now, I want to see, yeah, this is a target 10 to 12% in 2027. Their actual Q1, Q3. So Q4 actual, okay, so that's the last 12 months. That's the reason why it's coming up there. Let me just bring up quarterly. Okay, yeah, they compressed by about 12% year over year in terms of their revenue last quarter. I believe we just saw they're going to continue to accelerate. I don't think they're going to contract at minus 12%. I think they're going to reaccelerate, considering you're seeing these other businesses also reaccelerating out there. Power Solutions is a bullish case in this one, but obviously the analog and mixed signal group revenue, I believe, will continue to accelerate. That is actually not, they don't break this down in the way that I want. So I will just go back to this. I'll go back to this one right here. Hold on. Here we go. All right. So this is where they see the TAMs for each one of these sectors. This isn't necessarily the growth, but these are the six sectors that they actually apply to in their business. Okay. So they're projecting at about an 18% CAGR for the entire TAM that they're going for. And then they're also projecting for 2027 to be around 10 to 12%. So now, like I mentioned before, their business is broken out into 3 different categories that I have on the fiscal AI. And I think that this is all going to accelerate. Probably the one that's going to accelerate the most is the Power Solution Group revenue that we have over here. This is compressing at minus 11% as of last quarter. I think this will continue to accelerate and continue to push that revenue back to the positive region. I don't think we're going to see positive revenue growth this quarter, but I think they're going to provide guidance. This quarter, they're going to provide guidance for all of fiscal year 2026. I believe their fiscal quarter is on the actual quarter that we do have right now, which is Q4 2025. So they're going to give you their guidance for the next year and likely the next quarter. And I think that that will signal a massive re-rating in the stock. Now, how is the stock going to react today after close? Well, it really depends on how the algos work, but I do think that this is still a good buy to hold on to for the next couple of years, and therefore I am positioned for that. But like I mentioned before, guys, I don't have any call options this anymore. I used to. I got rid of those call options, and now just sitting on shares, but it is still a big position to follow because I did exercise some of those shares already. All right, so their slowest growing is the intelligent sensing and group revenue. This one's not so important. This has been fairly stagnant for the last 10 years. For the last 5 years, according to this chart. But I do think that this analog and mixed signal group revenue, and I do believe that Power Solutions is going to reaccelerate. And that's the reason why you've seen on the stock chart that it's been lagging for quite some time, because it is going to follow that revenue acceleration and bottom line growth. So if I bring up the chart for ON Semiconductor over here, we can see here that it kind of did bottom around 2020. No, it didn't bottom around 2020. 2023 was when it started to decelerate in everything. And I believe that this is all bottoming. There's also other companies that are part of this analog business in addition to PowerChip. There's ACLX. No. Celis. There's also ST Micro, which is doing pretty good considerably. Yeah, that one gapped up today, which is very good news to see when you think of a lot of these stocks. On Semiconductor, this is something that, like, this is up 10% today, and On Semiconductor is going to be reporting today. So I do wonder how the stock is going to react to this. I think it's going to be pretty positive. There's also another one as well. Navitas is also in this sector, and that's obviously seeing a lot of positive momentum. This one is not necessarily in the same profitability profile as On Semiconductor is. I am more bullish on Semiconductor because, I mean, they are a profitable company, right? But they are not growing nearly as fast as Navitas. But I would say that when you think about the onshoring for the U.S., Navitas is likely to get a benefit, but so is On Semiconductor. So going to keep an eye out for that earnings. Of course, I will be on the I'll be on Amit's market close for this one in just about 30 minutes. So I will talk about a few more things, and then I will wrap this one up. The next one that is also reporting today is AMKR. I mean, this one's closing. It isn't closing at a 52-week high, but this chart is extremely bullish. Look at this. Look at this yesterday. It bounced off last Wednesday. It bounced off of the or it broke the 50-day moving average, and now it's above all the moving averages again. This is always a bullish chart coming into earnings as well. Like, yeah, maybe it's closing at 52-week highs. Not the best thing you want to see going to earnings is like, where's that upper momentum? But we've seen before that the momentum can continue. And these two stocks are looking very bullish right now. AMKR is no longer a mid cap anymore. This thing has basically doubled since I got in A lot of you people are part of Stock Talk, and he got in at around 24 bucks. I got in around 30 bucks, but I was able to capture a lot of upside with calls on this one, which I'm currently out of, but still bullish this one long term. So that's going to help reduce the volatility in the portfolio. I mean, it is really the time for picks and shovels. I mean, you look at here, Taiwan Semiconductors at an all-time high, guys. NVIDIA, where's NVIDIA at? NVIDIA is 190 bucks. It's not at an all-time high, but it's near an all-time high. Where's AMD at? This one was suppressed pretty low. AMD is at 215 right now, and the SOX ETF is trading near an all-time high. Like, it is still about the picks and shovels, guys. I don't think that story has necessarily changed, and I think that music is going to continue playing for everyone as long as the market continues to stay bullish. And, you know, whenever I look at this stuff, I don't think that, I mean, yeah, I'm so bullish software, but like this chart needs a lot of work. Like this is still a very bad looking chart, and there'll probably be a time to buy this chart, and I don't need to pick the bottom for it. But right now it's really about the picks and shovels in this one. Holy cow, BM&R is back in the $20 range. So hopefully you guys caught the bottom in there. This one's probably looking for a pretty good setup as long as we break that 9 and 21 EMA. So I'll take a closer look at that one. But yeah, I mean, we'll see. I'm going to talk more about Silicon Motion. Again, this is a very bullish chart. I'll talk more about this one probably later. I'll probably record something for you guys. But yeah, hand pink waving AMKR $75. Oh, that'll be amazing. It was $75. I mean, the thing is trading at $52. That would be about a 30-40% upside, which is great to see. Yeah, that's right. That's right, baby. It is a stock market day. Amazon will close the gap at 195.6 before getting higher. Interesting. I'm looking at the Amazon chart right now. I mean, this is a brutal chart, but I'm still staying bullish Amazon. I've held through much worse than this, and I will continue to hold no matter what. Big position portfolio. I mean, we'll see. If Amazon goes to 300 bucks, it might be time for me to trim Amazon. But until then, I'll be holding on to it. So we will continue to monitor that situation and see what happens. All right. So we have other earnings reporting this week. Let me go ahead and bring up the earnings calendar over here. All right, so this week we have more than a few things, okay? We have ON Semiconductor and Amkor after hours today. We also have a bunch of other companies I'm not really too interested in. Tomorrow morning, we have Spotify, we have Datadog, and Oscar. Datadog is an observability company. They specialize in observability for applications as well as infrastructure. So this is going to be an interesting one to look at. Interesting. Okay. So I'll be taking a look at those earnings tomorrow. Not going to be doing live in the morning for that one, but I like to keep abreast of most of these software companies because that is a leader in observability. Tomorrow after close, we have Robinhood, Cloudflare, Astera Labs, and a few other companies as well. LEU or Centrus Energy is reporting after close tomorrow, so that's going to be a decent size one for me. I don't have a massive position in LEU, but I do have a position in there. That is mostly for the nuclear enrichment facilities. This is mostly my nuclear play, not a big position again. Wednesday morning, we have Unity and Shopify reporting as well as Vertiv Holdings. Vertiv is a cooling technology for all these AI infrastructure. So, I mean, it wouldn't be surprising seeing this trading at all-time highs, given that they have a large leg and they also are a partner of NVIDIA. AppLovin, also another ad tech company, is reporting after hours on Wednesday, in addition to Grab Holdings. Confluence, data streaming company, is reporting earnings after close on Wednesday, but they're already being acquired, so I don't think you're going to see much move in that stock as well. Cisco's reporting earnings. That's going to be an interesting one because Cisco is probably a major beneficiary of hardware and networking equipment as well as cybersecurity that we're seeing today. So that's going to be interesting to see. I mean, that stock is trading near an all-time high. Thursday morning, I think I'm going to be streaming on Thursday morning with a few other people. NBIS reporting on Thursday morning. That's going to be interesting to see. Definitely going to be a mover for a lot of the software stocks. And CapEx is definitely making a comeback. I mean, you're having all these med caps basically spending $650 billion for the next year. So, I mean, one of the biggest beneficiaries is going to be a lot of these data center stocks. So we will continue to monitor that one. Iron Mountain is reporting earnings, not directly a competitor with Rubrik, but they are in data security when it comes to cybersecurity. So probably going to have a little bit of impact on that stock, but more of Commvault. Commvault did not do well in the last earnings, and that did bring down Rubrik as well. Coinbase reports Thursday after close. I don't think the earnings really matter that much. Arista Network, another networking company, reports on Thursday after close. So that's going to be a Broadcom mover as well, in addition to Astera Labs. So pretty big for the networking equipment companies that are reporting this week. And yeah, Cameco, CCJ, more of the energy stuff, as well as Enbridge. And that's more of the energy transfer product, not energy transfer itself, but closely related to that one. And I didn't even know they're still reporting earnings after close on Friday. That's pretty interesting. Why would who the heck is watching earnings after Friday and close? You know, actually, there was a company that reported earnings after closing Friday one time. That was Palo Alto, but that was because they pushed back their earnings. So going to continue to wait and see what the earnings have for us. Next week is going to be a pretty busy week as far as software goes. You do have Palo Alto Cybersecurity Giant reporting next week, but we'll get a little more into that. Lemonade is reporting next week as well. All right, so I think that about does it for today's podcast. Need to take a break, guys. I'm going to be streaming most of the afternoon with Amit on the AMKR on Semiconductor. It's going to be a big day. Can you give us a quick overview of Zeta? I will next time, but I did say this a lot on previous podcasts that I've done. Go ahead and check those out, guys. It's a lot. Yeah, what's going on? What's going on, chat? Oh, you did sneak in the back end there, actually. You snuck in the back end pretty nicely over there, actually. So great to see you again, Evan. And yeah, I mean, we do have. I mean, the market is still bullish. I mean, it would be nice to see a rally into close. That would be very nice to see a rally into close, but we don't need to have that rally into close. But yeah, I mean, Meta's doing pretty good today. Bitcoin's coming back. BMNR is coming back. So congratulations to all you BMNR holders. But yeah, great day to see a reversal of the stock market, guys. Going to be reporting on those earnings, of course, on the Twitter. But again, go ahead and check out the Wolf Financial YouTube. Lots of content out there. I did share a clip from a video that Gav, the CEO of Wolf, did have with Peter Schiff. In terms of gold reaching, I believe that the price target was 12,000, which would be very interesting to see in gold. That's more than a double from here, and that's a lot of market cap. Probably not going to happen this year, but I could definitely see it happening maybe the next decade with just the amount of liquidity expansion that we are going to get. You think this is a bull trap? I wonder if this is a bull trap. That would be a crazy bull trap. I mean, it's difficult to see a bull trap because we have the Qs closing above the 100-day moving average. I mean, things don't necessarily turn out to be a bull trap most of the time. But, I mean, hey, if the Qs close above this 100-day moving average, that wouldn't really be a bull trap. It would be a bull trap if it rejected it. But we still have about 40 minutes left in the day. So, I mean, if this rejects this 100-day moving average, it could be pretty bad. But, I mean, the RSP is at an all-time high, and SPY is about to have an all-time high. So we'll see what happens. I mean, you know, it's a little debatable. We'll see what happens with that one. I try not to front run the price action when it comes around these critical points, but this is not really a market to be short. Apple was pretty weak this morning, but since then it's recovered a decent amount. However, the Apple chart is still pretty bullish in my opinion. And Amazon, of course, is just lagging all day. Like, I don't understand why these guys got to give Amazon such a hard time. All right, guys, I will talk to you guys later. Great chatting with you. Speak to you on the next one. I'm probably going to talk about a little bit on Semiconductor and AMKR earnings tomorrow on the podcast. Thank you.